Hi, good morning and welcome to the Trinidad and Tobago Chamber Industry of Commerce panel discussion on insuring against disasters. I'd like to introduce you to the panel. Today we have with us Richard Espine, Executive Director and Group President of Property and Casualty, who's also the Chief Executive Officer of Guardian General Insurance Limited. To my left, we have Dean Romani, Group Chief Risk Officer of Guardian Holdings Limited. We have Marcia Romani, Assistant Vice President, Overseas Operation, Guardian General Insurance Limited. Janice Orzano, Assistant Vice President, Trinidad Operations, Guardian General Insurance Limited. And David Lee Aping, Consultant. Welcome all.
Thank you. Thank you, George.
So, we've been hearing about natural disasters a lot these days. I mean, this year has been exceptional. In Trinidad, we see the effects. We see when town floods, we saw Tropical Storm Brett, the flooding in South, and we're now learning slowly but surely about the causes. But in this discussion, I don't find there's enough emphasis on the role of insurance and how insurance plays in natural disasters. So maybe you all could kick it off by explaining to us that role.
Sure, Jared, and good morning, everyone. The thing is that Trinidad has not really suffered a major disaster. And because of that, there's a lot of complacency when it comes to insurance in this part of the world. If you look up the islands up north where hurricanes happen a lot more frequently, people pay a lot more attention to the value of insurance and the role that it plays with them. In particular, helping them get back on their feet. I mean, it can't protect them totally from the events that they face, like a Category 5 hurricane like we had here. It can't prevent them from a major earthquake like in Haiti, but it certainly can help them get back on their feet. A lot of people don't see that value. The other thing that people also don't recognize is a lot of the times, the economies are in shambles, like in Dominica, like in Grenada after Ivan. The economies are in shambles, and what happens with insurance is most of the time, a lot of money, because the insurance companies buy a lot of reinsurance external to the region. So there's massive inflows of hard currency to help rebuild the economies. A lot of people don't put a lot of value on that. And I think that's one of the biggest values that we have there, basically. To get them back on their feet as quickly as possible with external funding when the economies are in a bad way. And that's a whole capital injection that helps boost the economy. There's a lot of new industry created, there's activity, which is good to help it get back on its feet faster.
Okay. But perhaps another way to look at it is, as individuals, the single largest asset is your house. For companies would be the buildings and the contents and the machinery and stuff like that. And what insurance does actually is that it helps to provide financial support to individuals and companies who have been affected by major losses.
Excellent, because I think, as you said, in Trinidad, we haven't been affected by a major natural disaster. And because of that, I don't think it's ingrained into us to prepare in advance. And a lot of what we get is on the back end, and rather than the before and planning for before.
Yeah.
So, I mean, how have you all gone about it, or at least getting that across to the nation that has not, does not have the mindset?
That's a good question, because let me just go back a bit. One of the biggest issues you see, and I mean, David can speak a little bit more about it later on, is that there's a lot of underinsurance that takes place, okay? And people are either not insured or inadequately insured, more particularly inadequately insured. And you find, and I'm using our experiences from up the islands where we face hurricanes regularly, you find people are a lot more conscious of the need for insurance, and two, the need for proper values on their coverages, because there are certain clauses that would apply and you won't get full settlement if you underinsure. But because people get exposed to the events, then they are much more attuned to this, much more sensitive, I should say, to it. What we find here in Trinidad is that we do write a lot to our clients, for example, reminding them, Janice, you could confirm that. I mean, and I'll let Janice speak a little bit more about that when time comes. That every time someone comes up for renewal of their policy, we write them and remind them of the value of proper insurance coverage, the sums insured, and we give them some guidance as to how to arrive at those proper values. But the truth of the matter is, people have to balance budgets, and then people make short-term financial decisions that, you know what, I have this to do and that to do, and I'm just going to take the minimum, basically, until something happens. I mean, Janice, you want to?
Yes. From my experience, what I've seen is a lot of times people don't recognize the value of insurance. And even though you would, unless you experience a claim, I don't think you get the opportunity to really see how your policy works for you. So many times clients don't see the need, or they insure for very little, what, as Richard was saying, under insurance, and they don't even recognize that that is a disadvantage to them. So generally, yes, whilst you try to cultivate, because we have had shows on the radio, we've been on the radio talking about insurance and so on, but still there isn't that, I don't think, that deep awareness in our islands in terms of, in Trinidad, for the need to insure and how insurance can really take you out of what I would say is really hardship, because when you experience a loss, you really now have a financial loss that you need to cater for, So yeah.
Agreed. I think what would help drive the point home, and not meaning to put anybody in the spot, is a case study from up the islands from those who have experienced it. Without calling names, I don't know if you all could, draw a reference. And I think that really sends the point home. And especially, this is why it's good to have forums such as these to explain that point, because I think it's an important point. So I don't know if you all could talk, without calling names, of course, about any experience you all had.
Well, I mean, Marcia and Janice actually spend quite a bit of time up the islands, Marcia in particular, because that's her portfolio. But I want to say this, I mean, Marcia can give real life examples of the kinds of experiences that we've seen. But I also want to say that people need to be mindful, because what you see now, a lot of the disaster relief that has to take place is because people don't have insurance, one, or because people are uninsured and they can't get back on their feet. I mean, the governments, there is the CRIF fund, the Caribbean fund, that helps the governments and so on with some of the infrastructural type stuff. But a lot of people, one, either don't buy enough insurance, try to buy cheap, basically, only cheap sometimes, then they don't get their claims settled. And we've seen many a time, going way back to even Ivan in 2004, where there's still unpaid claims in Grenada, Cayman, and those kind of areas. And there's a real possibility, because, not to digress too much, but the events that took place in this year, this hurricane season, were unprecedented. I mean, 3 Hurricane 5 categories forming in the Atlantic. They don't normally become Category 5s in the Atlantic. They normally cross into the warmer waters of the Caribbean, and then maybe a Category 3, and then go up to a Category 5. And what we've seen this year, and the extent of damage, like maybe 10 islands affected, and there are thousands of claims. And there is a real possibility that a lot of people will not recover from that and will not get their claims settled adequately or completely. And those are some, but I mean, Marcia, maybe you could just, if it's with shock value, maybe give an indication of some of the things that you saw up the islands,
I think for me, up the island, if I compare it with Trinidad, they are much more sensitive to risk mitigation around hurricanes and even natural disasters.
Because they had to be, right?
They had to be.
Yeah.
They've been exposed to it.
Yeah.
But the issue at hand is that even the design of the home lends itself to risk mitigation. The roofs, the pitch of the roof, the eaves of the house, the design of some of their commercial buildings. I've seen properties where beautiful properties, glass properties, where they will tell you it's tempered glass. The glass stood, but the rest of the building crumbled. You also had situations with this particular hurricane, Irma, where you had a 2-story building of a bank, 2-story building. And when I went, it was now a 1-story building. And the entire devastation, the job losses, the temporary job losses, because you're talking about reconstruction. The storms are getting more vicious. Hurricane Irma was a Super 5.
Yeah.
And I saw concrete structures with steel embedded. And as an underwriter, I thought that was a very good risk. And I saw that crumbled. And I saw it crumbled.
What island was that?
That's BVI.
Totola.
Tortola.
Yeah.
Tortola. That crumbled. I'm seeing in Barbuda, Antigua, which was the beginning of that storm, where up to today, there's no one living on that island.
Yeah.
So the whole island has been decimated. So that entire economy has gone. The thing that I came away with this particular hurricane is the design of the buildings. So even for insurance purposes, the design of your building will impact on how quickly you get up, how quickly you can get back up to business. And these wonderful in the Caribbean, we love to look at the sea and the ocean, and you have all these wonderful beachfronts. And I think you can build to take advantage of that, but you need to mitigate. You need to mitigate with shutters, you need to mitigate with your design. So from the beginning, your design of your building is going to help you come out of these storms.
But if I could just say something, Dean, 1 second. I mean, Jared, when you face these storms, there are a number of different perils that one faces. There's wind, pure wind. And I mean, a category 5, like Irma, at 180 miles an hour, is like a freight train hitting your home, literally. I don't know how else to describe it. And I remember Marcia telling me about one of our agents, Turks and Caicos, who indicated that what she couldn't handle was the 4 hours of deafening noise that was driving her crazy. She was in tears. She said it was 4, she just wanted it to stop. Correct me if I'm wrong.
Yes.
Right? So at 180 miles an hour, that's a freight train hitting your house, that's one. Then there's impact damage, because anything that can fly, that can be moved, will be moved. Even things that you don't think can be moved, will be moved. And again, that's why when you talk about disaster preparedness, for example, we talk about clearing your yard, moving things out of the house, moving pots, chairs, because a plant pot becomes a missile.
Yeah.
And so you have massive, so you got the wind, then you got the impact damage to your homes, cars, and as Marcia would tell you, and Janice, when they drove around in some islands, there wasn't a single car that was not damaged.
Yeah.
Not a single car that was not damaged in some form or fashion. So the impact damage is phenomenal. And then last but not least, you have water. And if we go back a few years, which was like into Ivan in 2004, when you have an island like Cayman, which is a fairly flat island, and you get storm surge, literally the sea runs from one side to the other side, completely across. And that's salt water intrusion into your homes, into your electronics, into your electrics, into your cars, and it destroys everything. So that's why Marcia referenced again, when you build close to the sea, oh, it's nice. But every now and again, that water just runs way over, and it's salt water, and it's very destructive, and even, I mean, it will wash away an entire building. Yeah? So those are the kinds of things that you see. And then there are things that are almost like phenomenons, like Marcia will tell you about a boat on top of a building.
Yeah, two-story
She
building.
thought it was put there. But it was put there as an ornament, but it wasn't. The storm put that boat on top of a building.
Yeah.
And there's a cow
There's a cow.
that was dead on top of a high tension wire. We have a photo of it. Literally, he was picked up like presumably in a tornado type.
In a tornado.
Thing, and sucked up and put on top of a high tension wire where he would have been electrocuted. That is really, I mean, it sounds funny, but it's scary actually if you live through it.
And just to put it in perspective, right? What you have is, and to understand what a category 5 storm is, storms are usually different needs. So there'll be a tropical storm. Then you'll have a category 1 hurricane, 2, 3, 4, and then a category 5. So far. In the Caribbean, about 33 category 5 storms are formed in the Caribbean, with only 2 making landfall. All right, so that to understand that Irma and Maria, was a significant storm. Just sort of put that.
Yeah.
the damage on both were, in excess of $100 billion. And that too is
I
another.
think you should repeat that. I think you should repeat the amount for Gerard.
Yeah.
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 100 billion.
100 US dollars.
That's incredible.
That's incredible.
Yeah,
People have to understand.
Very hard to wrap your mind around.
Yeah.
And just to get your, the question you asked regarding how do we prepare? So as an insurance company, risk management is paramount to us, and so that every year we understand that there are some disasters we can't prepare for, and then there are others that just happen. So what just happened? Earthquake. You can't prepare for an earthquake because you don't know exactly when it's going to happen. A storm you can prepare for because you'd get early warning signals to storm, etc. And what we do every year prior to the hurricane, trying to form a catastrophe team, almost expecting that this going to happen. If it happens, how would we react? What do we do?
And who do we?
Do we being, well, the entire team?
At Guardian.
Yeah. Right.
Different departments and divisions within Guardian.
Mm.
So that, preparing for when it happens so that we can react quickly, collect funds quickly, and disperse funds quickly to the shores so that they can be back in the same position practically. So I think the pre-planning before the hurricane is important. And then after the loss happens, we are able to react in an efficient way.
Perhaps, Jared, I know you have your sort of order, but perhaps it might be a good time to ask Marcia to sort of give us a practical sort of walkthrough as to how we prepare for the hurricanes and how we...
Was actually my next question.
Okay, sorry.
No. The thing is, with climate change,
Yes.
I think there's enough scientific evidence to prove that these things are going to be happening more often and with greater intensity.
Yes.
I don't think that's a discussion.
Frequency and severity.
Exactly.
Yes.
And we really need to get on top of it, and especially in Trinidad. And as that belt lowers, they always say we're out of the hurricane belt, but climate change will bring the hurricanes into our belt. It would be very good for us to find out about this. So,
And before Marcia goes, I want to say it's interesting that you said that, because I noticed this year in particular, in the early part of the season, quite a few storms formed very, very south and stayed low and straight for a long time. Now, I don't want to be to appear to be sort of creating any sort of panic among people, but just as an observer, I just found this year, and it may not happen next year because I am not a climatologist and I don't know everything, but certainly, and if you go backwards and if you went back to when the hurricane season started, you see from very early, a lot of storms from very south and came straight across. That's how we ended up with Brett, but they were coming across, staying fairly flat as opposed to swinging up as they usually do. Hopefully, that was just a one-off year. I don't know, but I think that's instructive, as you just pointed out.
absolutely. I'm not a climatologist either, but I think the climatologists are saying that.
Yeah,
So,
yeah. Sorry, Marcia, you wanted to give us a idea of your own, how you all prepare for? Go ahead.
Before I get into that, I want to add to what you're saying, Richard, with respect to Irma. I was surprised by Maria forming so close to the fact that Irma was such a large hurricane.
Yeah.
And normally with a large hurricane, it would have drawn all the moisture out of the atmosphere, and it would have pulled all of the warmth out of the sea. So you would not have expected such a large hurricane as Maria to form right after. So I'm not sure what's going on there. So I'm not sure that's a pattern to come. But coming back to preparing, I think once I took on the job at Guardian in this particular portfolio, well, I became a climatologist of some type. So I'm always looking, as soon as June hits, I am preoccupied with the weather. And I'm always looking at all these little formations of the coast of Africa. Cape Verde seems to be where they like to form. And you're looking at that, and from the time we start to see one of those formations, our preparation starts to kick in for us. We do have a detailed catastrophe plan, which we invoke often as soon as one of those depressions start, and we monitor it. We monitor the path. There are different projections. There's the European projections, there's the American projections. And depending on the projection, I know which one of our islands will be in harm's way. We basically, with this particular CAT plan, it is shared with the different regions, and it has a lot of practical things within it, in the sense of identifying an alternative site, having batteries. Like one of the things this year in St. Thomas,
Sorry, Mark, alternative site for the
Operations.
for the operations,
Service our clients.
because the nature of this business insurance, whereas maybe in other types of businesses where the island is down, insurance, you've got to be up to serve your clients. So as soon as you've gotten the all clear, the water has receded, you have to be there. You must be there. That is something we feel very strongly about. So the agents must have an alternative site. If your primary office has been washed away, has been damaged, no electricity, or maybe you're not allowed to enter that part of the island because of all the electrical lines, you must have determined an alternative site and a form of communication to your clients as to where to find you, so that we can start that process of the claims process to get them up and about, because that's in nature of what you bought. When you bought your insurance policy, policy was basically to get you back up to where you were. So we as I was saying, we have a detailed plan, and it goes into things like that. It goes into having batteries. It goes into having an alternative site. It goes into basically having pen, pencils, claim forms. It really is a very detailed plan which we book. Once that happens, for us at home, we have determined, as Dean was indicated, we have a team ready to fly, and into conditions that are not the best conditions at all. So these are not conditions that a normal person will want to get into. And we would do that, and we would land and start the process. And start that claims process. We would try to communicate. Communication tends to be a problem on the island, because a good example this year is St. Thomas. All cell towers were down. So therefore, cell towers are down, no internet access. So here is an island that there's no communication. There's no communication.
It sounds like first responders.
It is a little bit of first responders, and you have to get creative, and you have to be driven to bring that relief to the respective, to your policyholders and to the island. Sometimes a bottle of water, so like we flew in with cases of water. When people came, we just said, help yourself.
Because potable water is another big.
Yes, batteries was it was a desired commodity. So I think for us, we were very lucky in that our company has a jet, so we were able to fly with a couple of cases of batteries. Because no electricity.
Yeah.
So the only way they could basically communicate is with batteries, radio.
Dean, you want to speak a little bit about some of the actual mobilization in terms of adjusters, reinsurers, and that sort of stuff, what we did, and then we had meetings and so on. That's critical, yeah.
Part of the plan, each year, that knowing that we write it, or we offer insurance, and most of these territories are exposed to hurricane. So we know that each year we're bound to have some type of loss. That's why we do all this pre-plan. So part of what we do is we touch base with international loss adjusters. Once you have a hurricane, something as significant, you find we would get external consultants come in and assist with getting claims fee quickly. So we touch base with a lot of these adjusters. If a loss happens, we want you on sort of question the adjuster. Once we hear that a hurricane is in the ocean, we touch base with them again. Say that, and then we do some projections, some science, and based on where we think the path of the hurricane will be, can plan to say, these are the amounts of people which is very important. On the other point that Richard mentioned, reinsurance, and perhaps I'll explain, so that individuals and companies will take out insurance with an insurance company. The insurance company will take that insurance and they will insure it again with another insurance company. And because they insure it again, it's called reinsurance.
Right.
And the companies that offer this would be a reinsurance company. Now, why would we insure it again? We'd insure it again. Again, the insurance principle is to spread the losses. Capital providers. And we would insure it again with companies that are rated by AMS as a A-class rating. These companies are approved by our board and stuff like that. So it's only the finest quality of security. So that when a loss happens, you find that we are able to touch base with these companies. We'll send significant funds. In the main, these funds are foreign currency, US dollar funds. So it helps with regard to where we write business in US dollars. We have no excuse with that trying to get foreign currency because our region so that a loss happens, the first thing we touch base with the reinsurer. We send the funds in, so we are able to send the funds quickly to our policy. That's proved to be very useful.
Yeah.
Good, because, well, we're talking about Maria, we're talking about Irma, we're talking about insurance, and we're talking about reinsurance. So how have these hurricanes affected the industry?
Let me perhaps start off. I mean, well, first of all, it's going to test the industry because these are unprecedented losses.
Which is what I'm saying. Is this a moment that is uncharted for the insurance
to
industry?
some extent, in terms of
frequency and severity?
Frequency and severity, yes. And what was different is usually when we have a hurricane, we're dealing with one or two islands affected. This time we had, I think, maybe 10 islands affected,
Yes,
without actually counting.
which again is...
So logistically, it was very challenging to be the first responders, as you referred to there, and thing. But I think the biggest challenge to the industry will be the financial challenge, the capital challenge, because these are losses that do challenge the traditional scenarios or expectations of insurers. Sorry. And that's why insurers have to be very conservative in their structure of their reinsurance program and how they take on risk and how they price risk. And that is critical. And in recent times, actually, that's been challenged because the markets have been soft and rates have fallen substantially. So this is going to be a big test. And it's a little bit to go still. This is going to be a big test of the quality of insurers, the structure of their programs, their own structure of their own coverages and so on, and the capital adequacy. And that's going to be a big test. One. So I'm hoping that everything comes out fine. I know we will be okay, but it's going to be a test. Secondly, it's going to affect the market going forward because the reinsurers now have taken some big losses on their chin. One reinsurer indicated, for example, he's lost 10 years of profit, basically, okay? And the truth of the matter is, and it's one international pool, and this was a year where not only did we have these big hurricanes here, we had big fires in California. People think it doesn't affect us, but it does because we all shop in the same reinsurance pool of capital. And then we had two big earthquakes in Mexico. And the year is not done, basically. California fires were unprecedented as well. So all of these things affect us. So what you find now is that there's a challenge now in terms of reinsurance and the cost of reinsurance, because it is going to go up if it's available. And we do run the risk as well. Let me just say this, that the Caribbean could almost become uninsurable at some stage. Because if severity and frequency increases, then at some point in time, how much do you charge for an inevitable event? Insurance is not about inevitable events, So that, what's the premium, 100% of the sum insured? You can't pay that, So all of these are things that we're facing now. And certainly, even in the areas that haven't been affected, the cost of reinsurance will go up. If the cost of reinsurance will go up, the cost of insurance will go up.
And Irma had something like 134 deaths.
Yes.
Maria was about 97. the reinsurance market has capital just in excess of US $600 billion. This loss, as I mentioned, both Maria, Irma, was in excess of US $100 billion. Yeah. So of course it had a significant impact, on insurance, on reinsurance. Yeah. It's something that they too would, it would affect, in some cases, some reinsurers affected their capital. In other cases, just affected As Richard mentioned, they have all signaled that they are going to increase their prices to insurers. So it's like insurers, reinsurance is like raw material for an insurance company. So insurance companies would buy this raw material, and they are then able to sell all the different individual policyholders. So we know that the price of the raw materials is going to increase. To what extent, I guess we're not.
Nobody's certain right now. Okay. Because I was explaining the scenario to you earlier, where I had a piece of equipment insured.
Okay.
And they told me when I have to redo, the premium will go up because of what is happening in the Caribbean. And so is that something that every Trinidad business should expect?
Yes.
Absolutely.
Across the board, huh?
But let me say this, Gerard. If you go backwards and look at it, rates in Trinidad have fallen so much in the last couple of years that, we must be the only product that is cheaper now than it was a few years ago. I don't know anything else that we buy that is cheaper. And people don't look at it that way. But if a guy gets a 50% discount on his premium, and you try to take it back up to what he paid last year, that's a 100% increase. He's like, what are you doing? You want to kill me. But if you go back and rates, and even if they go up, I don't think they'll be anywhere near what they were, say, in 2010. So the increases are not unreasonable. It's not like they're going to be twice what we ever paid in Trinidad. It'll just be more sensible, and it's important. You know why? Because insurance companies sell a promise, and if they don't do the right things to put aside funds to be able to cater for that rainy day, then they won't be able to honor that promise. So it's difficult for people to wrap their minds around it. It's not like you buy a shoe and it looks good and it feels good and you get immediate satisfaction. You actually don't get satisfaction until you have an event, a loss, which is unfortunate. But that's the value of the product. It's a net, it's a safety net. And it's also good for the economy, because if people aren't insured, then they become almost who are dependent on the state for help. So the more that people look after themselves, the less they become burdens on the state, because they won't have to look for handouts and help be rebuild and all this sort of stuff. At least do their part to some extent. Otherwise, it becomes a burden on the state.
This is interesting, because I wanted to ask, given your experience, would you say those in Trinidad and Tobago are adequately, sufficiently insured?
David, you want to jump into this point, because I know you.
All right. Let me just summarize all that has been said in one sentence. Come back to the role of insurance.
Yeah.
It's really to provide financial resources to recover after a loss.
Yeah.
That's it in one sentence.
Yeah.
And we can, we can look at this in many ways. We spoke about, rebuilding the economy, rebuilding your individual home or factory, as the case may be. I want to take a look at it from a different point of view. If everybody was adequately insured, then we won't have to go begging for handouts. We won't have to go to the government. We won't have to go anyway. The insurance industry would be able to pick that up.
Yes.
And that's the value of insurance. But because many of us are not insured at all, many are also underinsured, we find ourselves having to go cap in hand to whoever we want to go to beg. Now, one of the other roles is really a reduction in social costs, because if everybody was insured, the government wouldn't have to get involved at all, and other countries wouldn't have to get involved, and we wouldn't have to be begging all over the place. So that when you look at it at a macro level, really, the adequacy of insurance for the population as a whole becomes very, very important for the economy and the rebuilding of the economy.
To give an example, in 2004, the group was affected by Hurricane Ivan. In Grenada, in Cayman Islands, I mean, that was a significant loss for us. It was just below US $200 million for us, right? And you could check, it did not touch our capital. In 2004, we found that there were just about 50% of policyholders underinsured. That was a staggering figure for us. And that, what we do, I think our responsibility, I think what we do to encourage policyholders to be properly insured is at renewal time, we send out a notice to be adequately insured. We give an example of what happens if you have a claim and you're not adequately insured. So I mean, that is, I think we go all out to try to get guys to be properly insured, because it's really, a sad thing to see. You have a significant loss. You want to help individuals, and then they're not properly insured. So you find they did not insure the property, so that they can actually take the funds and go try and put their property back up.
Because I wanted to ask that, what happens in the case with someone who is underinsured? They are unfortunately left a bit exposed, I would assume.
Definitely.
Well, let me explain how that works.
Let David, just answer one thing though. I think you asked the question, are we adequately insured in Trinidad?
Yeah.
And I think if Dean's reference to 50% in Ivan, and we don't have current information yet on Irma and Maria, but if it's 50%, it's greater in Trinidad because we don't have losses here. The percentage of underinsurance is
Underinsured is greater in Trinidad.
But David, you want to explain a little bit about how it works? Yeah.
You see, it all starts back with value at risk. We have an asset, and there's a value of that asset. Okay? But when we insure that asset, we insure it for less than the value. So let's put some numbers to it. Your asset is valued at 100,000, and you choose to insure it for 50,000. You are actually insuring only 50% of that value.
And that is done to save on the premium paid.
Well, it might be for various reasons.
For various
people do it,
Laziness.
they have a choice.
Yeah.
Now, when you insure for 50,000 out of a value of 100,000 and you suffered a total loss, what might you expect to collect? 50,000.
At max.
At max.
50,000 is the maximum.
So what you have actually done there is insured a 100,000 asset for 50,000 or half of the value. And therefore, when you suffer a loss, the insurance company pays you half of the loss. The other half that you did not insure, you technically accepted that risk for yourself.
By underinsuring.
By underinsuring. And therefore, that other half that wasn't paid actually comes out of your pocket.
Absolutely.
So that's basically the concept of how it operates. But that underinsurance is a whole topic by itself, that's a whole session. Because there's a lot of details that go into that in terms of explaining it, and if I could have an opportunity to show it with graphics, then the audience will understand that very, very clearly.
Can I just add to David's point? Because I think what we don't, as an insurance public, realize the value of insurance. And so because of that, we don't understand what our role is. So many times we think it's the insurer's role to tell us how much our property is valued at. And we believe a lot of things fall. There's a negative view of insurance, especially in Trinidad. And so I think because of that, apart from the fact that people don't want to insure because they don't have the finances to, we're not very responsible in how we approach the things that we own and how we want to ensure that we can survive after something like a disaster. So let's say, like this year, we've seen the rates going down over the last couple of years. And even in trying to get people to say, okay, the rates have dropped, let's look at underinsurance. Let's take the whatever savings you're going to get and invest that back into your sums insured to make sure that's not been something that people have been actually taking up. So I think as a public, we need to be more responsible in how we approach insurance. There is value in insurance. Economies don't survive without insurance. And so, in my own experience, because a lot of my experience is in claims, and you really see how people suffer when they have a loss. And I know, but you don't want to wait till you've had that experience to actually take responsibility for what you need to do. So, as David was saying, with respect to the underinsured, I think, if I could gauge a guess, I think it'd be as high as 85% in Trinidad if
85%,
we,
uh-huh.
yeah.
I mean, that's not empirical evidence, but that's the sense
Yes,
you get
yeah,
sometimes.
that's a feel you get.
Yes.
Yeah, you know.
So what role can insurance play in getting people to insure at the correct value? I mean, is it an unawareness on their part, or is it just because, as we said, the premiums? I mean, and as you said, people tend to have a skeptical view of insurance. Maybe the insurers could work along with them and bring up all these points and get this across the board to everybody.
Well, it comes back to public education.
Yeah.
Which
Yeah,
is a
which
big
is-
part of it.
Yeah. I mean, I guess we could be accused of not doing enough. I mean, we could always be accused. I know for a fact that we do send out lots
No,
of,
yeah, I wouldn't say that.
No, I'm saying, I
Yeah,
mean,
yeah,
people
yeah,
come and say
generally,
that, but I mean, certainly we do periodically, the association does periodically run things, but, it's a boring thing. That doesn't make news. Nobody wants to read that, and a lot of times, I mean, I saw it in one island a few years ago where the bank, and because of the state of the economy, people were insuring, the bank was allowing the clients to only insure for
the loan
the
value.
loan value, which is way below the market value, the replacement value of the property. And we would warn the bank, guys, you have a mortgage, Gerard, yeah, you have a mortgage and you need to be mindful of that. And they said, no, don't worry about them, leave them.
Right. So we've talked about the effects of natural disasters in the Caribbean now. A large part of the Caribbean and in Trinidad and Tobago, a large part of the insured are small and medium enterprises. Can you all give us a little background on the insurance for small and medium enterprises and if it differs from, say, the larger companies?
So, David, you want to talk a little bit
Okay,
about
small, medium enterprises are exposed to risk just like the individual, and he's also exposed to risk just like the big companies. The difference is that in the small and medium-sized businesses, they generally tend not to have a specialized insurance department. I say that in comparison to the big businesses who really have sophisticated insurance departments and they see about their needs. But all businesses require protection against various types of risk, various types of disasters. What we have found is that the small and medium business, they tend to concentrate insurances on their physical assets, which means their building, their stocks, their contents, their machinery, equipment, etc. And it's almost limited to that. But there are so many other types of risks that they're exposed to that they are not aware of. For example, after a disaster, you want to put back your building, your stocks, your plant, etc. What happens to the profits that would have flowed if your business were not destroyed? That's known as business interruption insurance. Your business is interrupted, you have lost profits, and therefore those profits are insurable. During the course of that interruption, you may have kept on employees to do certain things, because if we are to get back in business, we must have employees to get us back into business. And whilst we are not generating income during that period, we are paying wages and salaries. Those wages and salaries are insurable as well. We run the risk of theft. We have a lot of situations where bandits are breaking into business places. That's another type of loss. We need to have theft insurance. We have lots of fraudulent type activities where business owners are losing assets and or other types of securities by virtue of dishonesty of their own staff. And there's a special type of insurance for that as well.
Meaning theft from staff?
Yeah.
Yes.
Yes,
By
theft,
staff.
yes, theft as a result of dishonesty, embezzlement, etc. of staff, as opposed to an outsider, a bandit, breaking into your building. Many small businesses move about or transport a lot of money, actual cash and other securities, and they go totally unprotected. Again, because there is no insurance department that has the expertise to guide them along those lines. Workmen's compensation and employer's liability. Workmen's compensation in Trinidad is compulsory by law for certain categories of employees, and yet the employers who have those categories of employees don't have the workmen's compensation. So in fact, they're in breach of a legislation. You know, normal public liabilities, another type of insurance that small businesses should have. You know, that would guard against unfortunate incidents in your workplace or outside of your workplace where negligence can be established against the employer and a member of the public gets injured. And the list goes on and on and on. I mean, come back down to simple motor insurance. Many companies, small businesses, again, they have motor vehicles. Motor vehicle third party is compulsory in Trinidad by legislation. Hopefully, most people will have that type of cover at least. But then we hear of accidents and it turns out that the owner and or driver of that vehicle was not insured. You know, that has its own consequences as well, you know. So small business really needs to have better expertise within their own offices in terms of guidance for these various types of risk, right? Just to switch a little bit on the other side too, small businesses have employees. They require medical insurance or health insurance. They require life insurance. They require pensions, etc. And yet, you know, they don't think about these things, right? Again, to make a comparison, the bigger companies, you know, what we might call the mega companies, the conglomerates, they will have all these types of insurances in place because they have expertise within their organizations. If they don't have it within their own organization, there are other companies who can provide those expertise for them, and they would seek those out. So maybe the small businessman, the medium-sized businessman need to have those expertise. If not within, the services are available externally so that they can be properly guided in terms of all their different types of risk exposures, because for every risk exposure, there is an insurance policy for it, you know. And coming right down to the liabilities on products liability, you know, manufacturers are outside there manufacturing their products, suppliers are supplying. What happens if you had a problem in manufacturing? A contaminated ingredient went into your manufacture. If it's a food item, you know, it goes out into the public, people are injured or they're, you know, food poisoning, it could end up in death, etc. And in a case like that, this is widespread because your products are on the public shelves, being consumed by the public. You know.
Would that apply to the leptospirosis we're having with our produce?
That needs some investigation. Right?
It could.
No, but it has to do with negligence on the part of the employer.
Yeah. You want to say something?
But I have,
no, sorry, Marcia.
I was just going to give some actual examples of what David was speaking about in the recent hurricane. It was a beautiful wine shop, really nice wine shop, and the hurricane was coming, and the owner of the wine shop, he did all the necessary things to mitigate his risk. He moved his wines, he moved the more expensive wines, he really did a good job. He came through the hurricane well, right, and there was minimal damage to his stock as well, and he was insured for his stock. However, about 2 days after the hurricane, there was looting, and he lost a considerable amount of his stock. Now, he was not, yes, his wine, he lost a lot of his wines, and as well as his money, but he was not insured for that. So he came through the hurricane pretty good, in pretty good order, and he had a policy that spoke to that, but he did not have a policy for the theft of it. There's another good example which I want to give concerning product liability. There's a cement company, and they had a mix which requires certain amount of ingredients, and they poured the cement into this skyscraper, and a couple of months after, the cement started to show cracks and wears and tears, and basically when they did the testing, they came to realize one of the ingredients was missing. One of the ingredients in the pour was missing. And that particular company did not have product liability, didn't have that. They had the typical structure, property, your building and equipment, but they didn't have that. And those things would have helped them tremendously.
But I think yeah, no, the point I wanted is to speak about is that we were just last week we were talking about emerging risks, and one had to do with cyber risk, and which is something that I guess I'm not sure. You know, I think people's general approach to insurance is unless you don't have a loss, do I really need the insurance? Which is why the point was made that in Trinidad we have not had a significant natural disaster over. So it's so just like that, cyber insurance or the cyber risk is one that which perhaps may be more applicable to medium and large type businesses, but could well affect a small business. It depends on to what extent do you use the web. So it could well affect everyone. But I think cyber risk is another one that is emerging risk. Just like the natural disasters we're talking about, could well affect companies. The other point, of course, is climate change, which we touched on. I think that too will have significant consequences that again, businesses need to consider. Don't wait until loss happens, and then go looking for insurance. It's better to start building a relationship now with companies, so that when loss happens.
Well, I think
some of these small businesses as well, many of them bring in significant values of cargoes, either in money value or in tons of cargo. Lots of cargo come into this country and leave this country as well, and they go uninsured. Again, there is a risk, there is an exposure on that trip from wherever it's coming into Trinidad, whether by air or by sea, and they go uninsured. Again, the small business, because of the lack of expertise within his own office, they are not properly guided as to all these types of exposures that they are really exposed to.
So can they come to the insurance to be guided? Should the insurance companies be guiding, or?
Yes, they can come to the insurance companies who can guide them accordingly. I suppose they can also go to the external brokers. Because they are a very useful. When I refer to external parties just now, I was specifically referring to brokers, because many of them would not have the expertise in-house, so they go to the external, and they can be guided by their brokers as well.
Because I think with SMEs, a large part of it is just a general lack of awareness of the type of insurance that they should have. And in terms of cybersecurity, that's actually something quite prevalent now, especially with Equifax and targets.
More prevalent than people realize, one. And there's lots of stuff like ransomware. Guys could shut down your operations until you pay a ransom. So there are many. That's a whole different topic.
Which is a new one. You talk about blockchain technology. In Trinidad they have Bitcoins. It's been one of the restaurants in Trinidad. Where you could actually use Bitcoin.
So but that's a whole separate session.
Right. So we're talking now about the cyber threats. We spoke about hurricanes and we touched on earthquakes. I wanted to know, is there different insurance for the different types of disasters that could happen? And we know Trinidad, well, at least we've been hearing for a while that Trinidad is due for the big one, meaning the earthquake. And apparently when it does strike, it's not a if, but when it will be catastrophic.
I respond in terms of what we have. I don't think we separated, but.
Well, what happens is when you take out an insurance policy, like say a policy to cover your home, the policy, it covers various perils.
Yes.
And so you would have hurricane, earthquake, theft, fire, and a whole list of other perils. So that I would say once you have a homeowner's policy for your building, you can have homeowners contents as well. But once the peril is on the policy, you would be paid. You would have the cover. And likewise on the fire policy, there's fire and special perils. So once you have the special perils, you will have the cover for the earthquake included in there.
No, but I think just to clarify on that, each peril is a separate peril.
It's a separate peril.
And the buyer can choose.
He can choose.
Any combination
Yes,
of perils.
Yes. And it
But
would be,
generally
yeah.
speaking, they are all incorporated in one contract.
Yes.
So the hurricane, the earthquake, the flood, the fire, the riot and strike, etc., would be all incorporated into one contract rather than separate contracts being issued for each one of those perils. Yeah.
Even
more
though
cost-effective that way.
I have known people who sometimes would say, I don't want this or I don't want this because I am built like this or I'm built like this. You hear people say that sometimes.
I suppose it would be on the insurer to do their due diligence to find out what risks would be more applicable.
Yes.
All
I
right.
mean, you would have had your standard policy that would cover the various perils, but now I think people want to have choice.
Yeah.
So for that reason, you'll find things being excluded.
So
Maybe
they can
keep the
tailor
price
make
down
their
and so on,
Yes,
you
they
know?
can.
policy to their
They can.
risk.
They can.
But sometimes it's tailor-made to their disadvantage because they may choose to leave out the more important perils.
Exactly.
Because they might find it expensive, for example.
Exactly. Which is would be the natural
perils.
Yes. Yeah, the natural progress. From the time you tailor make, then some things which they may not be aware of would be left out.
Yes.
And just to speak on that a little bit, I mean, take for instance on the motor, sometimes people don't want to cut back on the premium, they don't take the special perils. But they don't realize that special perils has to do with flooding and earthquake and so on. And what happens is that they go downtown. I mean, they tell us that they don't live in a flood zone area, but they go downtown and that's the day the flooding occurs. And the vehicle end up a total loss and they have no cover. So, you really have to be careful how you select the types of cover.
And I mean, everywhere or anywhere could be a flood zone.
Exactly. Especially when you have a mobile asset. It's not like you can say, well, my home is not in a flood-prone area, but your car, you drive around in your car. It could be anywhere,
And so what is the future that we're seeing for the industry when it comes to
well, I touched on that a little bit, if I could just sort of think a little bit earlier in terms of the increase in cover. There'll be repricing of cover, one. There could be restructuring of programs in terms of how deductibles would work. I'm just saying it can be. We don't know exactly yet. But certainly in some areas, not so much in Trinidad, we've seen change in terms because the market got soft. People were being insurers were being very lackadaisical in what cover they provided. They just gave away a lot of stuff. And they will feel the pressure now. Because insurance is all about sharing risk and people must have a stake as well because it's not only the insurance company. So you find things like deductibles will be looked at, the part that you pay. People must have a stake in it to look after the asset that they have insured. So there could be some change in terms, more so on the pricing and so on. But again, people can manage their own cover, for example, by looking at how much deductibles they want to retain. If they find it's a little expensive, they could take a slightly higher deductible level to give them a little ease on the premium and say, well, I'll take instead of taking X%, I might take the first dollar amount, I could afford that. So people can get a little creative, not silly, in terms of how they manage their own finances, going forward. So it's still early days, believe it or not, because I think the market is still trying to come to terms with the reinsurance market, the international market, what really took place, what's the pricing going to be like. We want to make sure that we have stock in trade, as Dean said, that we can get reinsurance. So we will be visiting and talking. We are visiting and we are speaking to reinsurers a lot. Some of them are hurting. We want to make sure that we have cover in place for our clients because we can only do so much. Because as you imagine, I mean, the values that we insure are way in excess of the kind of capital we carry. So we have to use additional capital outside reinsurers' capital. So they are a very, very important partner with insurance companies, a very, very important partner. And those are things that we have to work and analyze very carefully. What I want to say as well is that just for Trinidad is that, we always say, God is a Trini and this won't happen and this won't happen, right? The truth of the matter is earthquake is a big exposure for Trinidad. I mean, I hope never to see an earthquake of any magnitude destroyed, but that is the reality of where we live. It can happen. It happened in Haiti, for example, and I dare say I personally know of a few people who actually died there. One of the most scary things is that in the event of an earthquake, there's probably more loss of life than a hurricane, potentially because of collapsing buildings and so on. And that's scary. It's not going to be a good time for Trinidad. And people need to prepare. But as Dean had said too, again, the scary thing about an earthquake, or compared to, say, a hurricane is, you have a few days to prepare for a
You have to
hurricane.
prepare.
You can prepare mentally and you can prepare things.
Accuracy
An
of
earthquake could
prediction.
come in the dark of night when you're
Yeah.
sleeping and scare the crap out
Or
of
in the
you.
light of day, in
Or the
rush
light
hour
of day,
traffic.
rush
you
hour
could have
traffic,
anything, yeah.
And so how else do you prepare? One, building codes, at least, if anything else, making sure that building codes are adequate and enforced, right? I'm not saying that we building badly here, but I'm just saying that it's important. And then doing whatever you could to protect yourself with insurance so that you can recover from it afterwards.
Well, with earthquakes, I think within hurricanes, it's easier to retrofit a building for a hurricane than it is for an
than it is
earthquake.
for a thing, So that's why we can only go forward with that, basically. But you other than that, you just need to be prepared the best you could financially to protect your assets and your investment, because to rebuild from that is going to be very, very difficult. And we talked about the SMEs and the type of cover for them available to them, including business interruption. Because if your business is shut down for 3 months to rebuild, you have no income in that time, your employees have no salaries. All of these are things that people need to consider that we just take for granted.
Yes, absolutely.
Just like, I guess, internally and behind the scenes, we almost anticipate loss. Do a lot of scenario planning. You have a check on climate change and what it's going to do for us. You have a check on the growth of our portfolio. To ensure that, from a stress testing standpoint, that we are able to be around to fulfill the promise. That we are around to protect the balance sheet. And I think behind the scenes, there's a lot that we do, from a company standpoint.
Excellent. Does your disaster preparedness alter your insurance? How prepared
Or
you are?
perhaps your risk management might be the right question.
Exactly.
Yes,
the
it
risk
can.
management, yes.
Yes, and that's why I think David was alluding to the fact that a lot of the SMEs don't have risk management capabilities in-house, where some of the larger companies can. And so you find some of the multinationals will have a risk manager on board who would do a lot of stuff to mitigate risk, which in turn could rebound to your benefit. As a simple thing, for example, having sprinklers, fire extinguishers and sprinklers and those sorts of stuff. And some people don't bill for that. So yes, proper risk management will be taken into account in the pricing of the risk and so on, definitely. And one can do a lot to mitigate that, and that will be considered.
Excellent.
Okay.
So I don't know if any of you all would have any closing remarks?
No, I think we covered quite a bit. I mean, I'd like to thank the Chamber for giving us the opportunity, first of all. But certainly I would like to encourage people to become aware of the fact that natural disasters can happen in Trinidad, will, I dare say, happen one day, beyond what we've even imagined. And I mean, one only has to take a trip to Dominica to see what has happened, so that we have a responsibility to look after ourselves and not depend on others. And I think we need to do what we can. And it's not the end, but certainly insurance, I think, is something that very often is overlooked when we talk about disaster preparedness. But it has some role to play in all of that. And I think hopefully out of this session, people will get a better sense of the value and the relevance of it in the overall scheme of disasters and disaster preparedness. Thank you.
Okay. Well, thank you all for watching our webinar on Insuring for Disasters. My name is Gerard Rajkumar, and I hope you thought this was informative as I did. Thank you.